So today I will be going into the technicalities of blockchain technology itself, or smart contracts. I'm quite certain that we have the real specialists sitting over here. I will talk about inclusive insurance, or sometimes also called microinsurance, and why it is a perfect match for the use of blockchain technology. So very quickly, I guess you might have seen this already before. Etherisc is developing a decentralized insurance protocol to collectively build insurance products. And that means that a data scientist from Prague can develop a risk model. There may be an insurance license provider or a fronting company anywhere else in the globe that picks a product up. You might have a group of farmers somewhere in Mexico that wants to do something with coffee and insurance. And together you can develop this product, put it on a website, sell it, and then everybody involved in this earns a fair share on the product. So what we at Etherisc do is develop and automate the underlying risk pool, which is based on blockchain technology. So I'll get back to that later. So what is inclusive insurance or microinsurance? And I actually struggle a little bit with these terms all the time. When I started in this space, it was called microinsurance. Nowadays, it's all about inclusive insurance and financial including. And so the term inclusive insurance is more preferred. So, but it comes down to it is that it is insurance offered primarily to low-income populations or low-income people. Who have limited access to the regular mainstream insurance products or other services and ways to work on protecting yourself. So I would like to start by talking a little bit about myself, my learnings in the past years, and how I got involved in the blockchain space. In the early 2000s, I started my career at a Dutch insurance company called Interpolis. And I started as an underwriter, and after a few years I switched to the IT department, just out of interest in technology. And this combination brought me to a project in India. We were asked by an organization called Oxfam if we could help a local microfinance organization with their idea is to start working on microinsurance. And my specific task was to search for a software solution that we could use over there. And I searched for something in the Netherlands. I looked at a software system that was used by many smaller mutual insurance companies in the Netherlands, and I thought, well, this might work in India. So we went to India, and very quickly I learned that the license fees of this software were about the same height as the expected annual premium income for this microinsurance organization. So that was not going to work. And I was in the fortunate position that we were in India. The organization had plenty of in-house developers, so we decided to develop something ourselves. But this was actually also my first major learning when looking into the inclusive insurance space, the microinsurance space. If you are an organization targeting people at the low-income levels, and you want to reach scale, you need proper IT. But if you cannot afford this IT, you won't be able to reach scale. And so this is one of the reasons that still very few people in emerging economies have access to insurance. I really enjoyed working in India, and then I looked for a way to go there for a longer time. And I could work with the organization, DAN Foundation. I moved to India and spent there a couple of years. And while I was there, I had my second major learning. Amongst many learnings, by the way, but of course, for each organization, for each company, it's important to have low operational costs. But if you work with microinsurance products with a very low premium, you have very little flexibility to do anything. So if your operational costs are too high, you won't be able to be sustainable. Same counts for transaction costs. If your transaction costs are too high, you cannot be sustainable. So there are a few problems we encountered. So after a few years I went back to the Netherlands and I started as a consultant and focusing on technology for microinsurance. And yet I had the fantastic opportunity to do projects all around the globe. I worked with microfinance organizations, with insurers, software suppliers, donor organizations, visited many conferences, and always the mantra was, we need technology to reach scale. But nobody can get access to this technology because it's too expensive. So then in 2013, I learned about Bitcoin. And I was intrigued by this. I had the opportunity to transact small amounts of money for a lower cost than it normally was. At that time, transaction costs were not so expensive, by the way. A second thing that I found very interesting about Bitcoin, when I dove into the technology behind it and I learned about blockchain technology, is that it is open source. And so now it became possible for anybody to build applications on top of this blockchain. And this is something that I wanted to do, and like Stefan just mentioned, I started a company with a Canadian friend called RiskyBit, and we wanted to develop blockchain applications for inclusive finance. And we failed. And the past couple of years I spent more time on talking about blockchain technology than that we could actually develop applications. And I wasn't that smart that I also get well paid for talking about blockchain. But okay, then I was introduced by a good friend of mine, Tobias. I can't see him here right now. Anyway, he introduced me to Etherisc. That was last year. And here I am now, the inclusive insurance lead at Etherisc, trying to do something good. Okay, so I have an image over here about the coverage ratios in the various emerging economies. If you look at Latin America, only 8.5 people, low-income populations, have an insurance product. In Africa, it's 5.4%, and in Asia, it is about 6.9%. So there's very low coverage ratios. I mentioned already some of the reasons why this is, but if we talk about access to inclusive insurance, this is something that is measured by the ease for low-income person to buy an insurance product. What research has shown is that access or the purchase or renewal decisions of an insurance product are many times postponed by clients because they encounter many problems for the enrollment, pay premiums, or renew a policy. This, for example, is, think about a farmer who lives somewhere in Africa in a very remote location. There won't be an insurance agent around who could sell you a product or could even explain to you what is an insurance product. Many people have very much difficulties to understanding the products. If people have no experience with financial products, for us it's very normal to have a bank account or to have insurance. You get it as a child, but in many emerging economies this is not the case. And that is also perhaps because many people are illiterate. And then if they are able to buy a product, you see excessive documentation requirements also. And then it's just difficult to say, well, this is something I can do, or if a person is asked for their ID, just a simple ID, still many people do not have their own identification documents. So how can you buy a product if that is requested? Forms are very difficult to understand. And then I'll come with one more example. If you look, for example, at agricultural insurance, a farmer is depending on its income and will have only, in many cases, only have income when he has sold his crops. But how can he then buy an insurance product before before the season starts, or has to pay every month. Sometimes it's just very difficult. So, because of that, and the number may vary a little bit, but about 1.6 billion people right now have no insurance. And of those 1.6 billion, you got about 500 million small farmers who are responsible for a large portion of the food production on the globe. So try to imagine what will happen if these farmers get access to protection. I think the whole world will benefit by that. So, okay, then now the question is, so why will blockchain technology make this possible, right? Blockchain solves everything. Now, I don't know, but I think most of you who are involved in the insurance industry will agree with me that the insurance industry is heavily intermediated. And I'm convinced that blockchain technology will disrupt each industry that is heavily intermediated, and so it will also do with insurance. You will agree with me that now you have the opportunity to use smart contracts. You can streamline and automate insurance processes. Think of an agricultural insurance product for flood insurance, and there you have a smart contract that will automatically do a payment when a flood has reached a certain point, and sending a payment immediately to the insured when this happens. Here you have the opportunity to eliminate the need for an adjuster. And this is something that we can expand to a much more sophisticated way. And here you have the opportunity then also to reduce operational costs for an organization that wants to offer insurance products. So obviously this counts for mainstream insurance. But I think one of the other reasons why this is particularly interesting for inclusive insurance is that, and I hope I was able to clarify it already a little bit in my talk, microinsurance products have to be simple. Okay, and so the products that are being designed, they are simple. These products are easy to underwrite and to adjust. Talk about small premiums and claims amounts. And what I also realize is that blockchain technology, although it has many opportunities, still it's in its infancy. We have to keep it simple right now and move to something better in the next couple of years. So I think another reason why it's a great opportunity, because you have so few people that have access to this product. So blockchain can improve the solutions to facilitate access for enrollment, premium collection, renewal. But another thing that I find very interesting, that blockchain will create a possibility to get new ways of providing access to risk capital. I quickly want to show here an image how such an automated insurance product works for smallholder farmers. Here you have the way that you can develop a smart contract that receives incoming payment and automatically issues a policy. You have smart contracts that can monitor the central reserve and make sure that the minimum capital ratios are being maintained, but also for the money going out. You have a smart contract that is monitoring data provided by external data sources from satellites, and a colleague of mine from AgroApps will talk about this after my session, how we can use all types of devices to collect data that will check if a crop is lost or a payment has to be made. And that can be automated by a smart contract, and then you can do a payment in cash, but also in tokens. For example, tokens that can only be redeemed at selected farm input suppliers or other types of organizations. So now I've talked about automating the insurance product, but I think we can also now think about innovating the way a risk pool works. The question I ask people is, can why not provide affordable risk protection to small farmers and at the top of the value chain support this? If you look at a value chain, in my opinion, and I hope you agree with me, is that a farmer is the weakest link in the value chain. Each party in the value chain depends on the quantity and the quality of a product that the farmer produces. If farmers have no product, the farm input supplier has no sales. A retailer or a producer has no product, they won't be able to deliver to the retailer. And if the retailer has no product, we as a consumer won't be able to buy the product. So we all have an interest, and now we have blockchain technology where you can program money. So the question is, and that is something that I want to explore together with you and anybody who's interested in this topic. What kind of conditions do we need to meet to cover the risks of a farm? Partially, fully? What do we need to do? I'm very happy that now I can make an announcement also that we will be doing a project where we go explore this in Sri Lanka together with Oxfam in Sri Lanka and AO. And this is actually news. Today this news has been published, so it's your honor. Okay, thank you.
I think it's a good moment to say thank you to those who made this possible. Of course, Michael, but also the people of Aeon, which are in the room here, Tobias and Hugo, and I would like to that both of them should show up. So thank you both.
And just to give some weight to this, we have been waiting for this moment for 2 years. Thank you so much for making this happen, and just in time. You don't know how much time it takes to get this news approval through an organization like Aeon, and thank you so much for making this happen. Thank you to Michiel for pushing this forward. Do we have any questions to Michiel in the audience before we go to our last presentation before the break? One more question, maybe, regarding microinsurance. We have one question. Can you just stand up and shout? The microphone is not working well back there.
And it can also be for the next person, which is also going to talk about agriculture. If the market evolved in the sense that today you can hedge, like future conflict, soybean, corn, orange juice, like in the regulated environment, why are the farmers looking for extra security from insurers to protect the price of what they're selling?
Can you repeat the question?
Can I repeat the question? Okay, yes. You said, why don't farmers ask this question themselves, right?
If you have, so
if today we have future contracts that we can protect the price of the future in case of an accident, in case of a storm, or the crop is all damaged. So the market today created tools, financial tools that people can protect, as is what they have. Why yet the protection of insurance is necessary?
Right, well, in my specific case, if you talk about inclusive insurance, I talk about farmers who have very little access to any type of financial products. They are not able to purchase a, let's call it a price risk insurance product themselves right now. They need to be organized. And still there are many, many farmers. There are definitely products for the larger farmers that already are able to purchase their own insurance. I talk about the small-scale farmers in a coffee cooperation or in a cacao federation, those types of groups that have no access yet.
Does this answer your question? Very good. One more question, and then we go on to the next one. Yes, I think you will.
It's just a comment about that question, which is that, just a comment about it, which is that even though you can hedge risk with an instrument, like a futures instrument or something like that, it doesn't cover all of your catastrophic risk. And almost every market, most farmers rely on some government-supported agriculture insurance, just because it's
Okay, thank you very much. We go on to the next speaker.